good morning, everybody. It's the 22nd of December. We're Signal Centre Talking Bull. I'm Joe, joined by Steve this morning. How you doing, Steve?
Very, very smooth, Joe. Very smooth
Yeah, sorry about
transition
that.
in there.
Forgot the introduction. I'll do it at the end. Outro.
The outro, yeah.
Yeah, cool. Very close now to Christmas and having a bit of a break. So we've got two streams left, this one and tomorrow. So if anybody's got any questions, if they want to have a look at some charts before we wrap up for the Christmas period, feel free to send over your requests and we'll do our best to take a look at them. Okay, so let's get into the latest headlines and what's moving markets over the past 24 hours. And then we can see a look at some charts as well to see how things are shaping up. So headlines yesterday, the US consumer confidence number bounced back. Just bring up the details behind that. So we saw the US consumer confidence recovered more strongly than expected to an 8-month high at 108.3 for December from a revised 101.4 and well above the consensus forecast of 101. There were significant rebounds for the current situation and expectations component, and there was also increased confidence in the labour market for the month. But we did see a slip in home sales. The existing home sales number dipped further to an annualised rate of 4.09 million for November. This was below the market expectations of 4.2 million and the weakest reading since June 2020. Excluding the June 2020 figures, it was the weakest reading for 12 years. We continue to see that the Bank of Japan are active in the markets. They continue to buy bonds. They again engaged in unscheduled market operations to buy bonds in an attempt to cap yields. The dollar lost ground yesterday as well. It held steady for most of the session, but then we saw it struggle to gain any traction amid a bit of seasonal selling pressure as we approach the holiday period. So we are expecting liquidity to drop further in global markets. We expect it to fade ahead of the holiday period surrounding Christmas and New Year, with some position adjustment remaining a key element. This will maintain the potential for choppy moves across all asset classes for the remainder of this week. In Canada, we saw inflation edge lower. The consumer inflation rate edged lower to 6.8% for November from 6.9% previously, again indicating that maybe inflation has peaked, certainly in North America. So that remains an important factor. So let's take a look at some charts, Steve. We're going to kick off with Bitcoin, are we?
Yeah, going to have a look at Bitcoin first. Let me share my chart with everyone. Here we go. Really, not really a great deal to say about yesterday's price action in Bitcoin. We could look on the daily chart and just see how muted it was. We had a decent bullish engulfing candle. We had a decent rally in the indices, but we didn't get any follow through on Bitcoin yesterday. Very strange. Steve, maybe you're right. Bitcoin is a heap of, but never mind. Let's look at the 4-hour chart. It's still in a bearish formation at the moment. A bit of a head and shoulders type looking formation forming. It's not an exact head and shoulders because it hasn't really had a decent enough long rally, but it's still the same sort of price action. So we have got to take it seriously. Resistance all the way up to, well, 1,500 points above here is resistance all the way up. But this sort of like high here from Tuesday, we got up to just above 17,000, rejected quite aggressively, and we really remain under pressure. So nothing really to say on the crypto front, unfortunately. Sorry, guys. Let's take a look at more interesting commodities, gold. And we had another revisit to the 1824 high that we made on the 13th of December. Got up to just short of 1824 yesterday. And again, quite a muted day overall, $12 range in gold. And but it's remained elevated above this previous resistance, and it will be turning into support if we manage to retest it. We're above the 200-day moving average. Remember, we have crossed over the 55 and 100-day moving average, and that's looking quite powerful now, as this these 3 points here indicate this it looks like we could have a decent bottom in place. What I would like to see in this structure is maybe a retest somewhere around the 1680 level. I'll show you why. So this would be a classic inverse head and shoulders formation. Here's the left shoulder, the head. I'm not going to bring all the volume into it. but that's the sort of thing we could easily see in gold. Now, that would obviously require a collapse in the gold price all the way down to 1680, which is $140. So it's quite a big drop. Whether it gets there or not, it's still too early to say. But that's the sort of what it's shaping up to do. Now, we could almost say, oh, well, haven't we already formed the right shoulder, Steve? What about this one here? Yeah, potentially. It's an awkward looking formation, but that could be exactly what we've done. And it probably sort of like bodes quite well that way as well. We've sort of like come down, retested the neckline and project higher. So if we do get further selling in dollar, we're trading around the 104 level dollar index, then that's the favored move to the upside. The measured move target of the double bottom formation is 1844. We haven't reached there yet, but we're not far away, and resistance above there at 1900. So looking quite good there. Silver's projecting and looking even better with this inverse head and shoulders that we've drawn. Slightly different to the gold one, but it's still been quite made a great impact. And again, we're getting the 55-day moving average crossing over the 200, a bit of a golden cross. Unfortunately, the 200-day moving average is still moving lower. If it was moving higher, then this would be a lot more powerful. But measured move target for the inverse head and shoulders formation around about $25, and it seems like it's heading that way. Not really slowing down at all. Copper, however, has been capped by the 200-day moving average, and we have posted a lower high. So that's having a little bit more of a struggle, although we did form a bullish outside candle on Tuesday, and since then prices have projected higher, just short of that 38.2% fib retracement level at 386, and the 200-day moving average, which is just next to it. $4 for me is the key. If we manage to get above $4, further upside shouldn't be far away. Crude oil has had a great day yesterday, following two positive days. It's Monday, Tuesday, and Wednesday. We had oil inventories out yesterday, and prices have reacted positively to that. We are below all the moving averages, so we're still in bearish territory, but we've had a nice little turnaround. And again, you can see the head and shoulders formation I've drawn on the 4-hour chart. And again, it's not a great looking one. It's quite awkward looking. But it seems to be having quite a nice reaction, and we're above where the neckline hits the nape of the head and the right shoulder. That's at 77.82. Stalled yesterday around about 78.80, just reversing from there, but we've got plenty of support below as crude oil tries to find its feet and tries to find a bottom in this market. Brent crude oil, same sort of formation we're seeing, this bit of an inverse head and shoulders formation. We're above the Ichimoku cloud on the 4-hour average. Yeah, we're above it in there as well. Yeah, we've stalled at just in front of the resistance at 83.13 and reversed lower. Looks like we're under a bit of pressure this morning. But as the same as the WTI, there's plenty of support below there. And natural gas has been sort of like quite volatile recently, and we are trading. Let's look at the daily chart. It's a bit better. We're trading at sort of quite key levels. We've got this head and shoulders formation. The neckline is around about 533, and we've broken through it, close below it. However, yesterday broke back above it, and we're holding around that level. So it is key. So could we be putting in a little bit of support after breaking this pretty decent level? You can see, even if you go back all the way, probably till September. Well, I mean, even all the way back here, it's around about $5. You can see it's been quite pivotal in the past, this $5 level, and maybe it's going to be the same again. The overall formation is a bearish formation. However, we need to really get a clear break of this neckline to confirm it, and that hasn't happened yet. So hold your horses and wait, maybe. Anything else to look at, Joe, on my side, or?
No, I don't think so.
Crack on with
There's a
dollar.
few bits on FX to look at. Loveskin saying he can't understand why, or she can't understand. I'm not sure. Sorry, if or why natural gas is still rallying.
Yeah. Well, I mean, yeah, it does feel pretty negative. This is like a gun-to-head trade idea I did the other week, and it's, this I was thinking break this level. It should sort of vacuum trade, sort of be quite aggressive to the downside. We're it's winter. There's a little bit of, I mean, it's still, for me, it's still bearish. Still seems a good opportunity as long as we remain, I would say, below the 550, 560 level. Short term, we're still under a lot of pressure. Really needs to break above there. Now, that may be a level to watch. Let's get rid of that for a minute. And if we sort of think about it, what about an inverse head and shoulders formation on natural gas? So be careful with that one. I know that, oh, let's see. I know the left shoulders, it's not classic because the left shoulder's lower than the head, so it'll be more clear, a clear double bottom formation. We have broken above the neckline of that and closed above it, but it rejected. So it's chippity chop chop in natural gas, and really need to wait for a break. Either way, maybe a break above 560 or a break below 520, and go with the flow on either of those. I've got no bias in it really. Overall, obviously we've got that bearish formation, but it needs a really clear break of that this level, this support level now. So I'd be more aggressive if it broke lower. If it broke higher, we could easily see it sort of like trade back up. So be very careful with that one.
Thank you very much, Steve. Let's take a look at FX then, and start off with the dollar index as usual. Let's go there first. Okay, so still got this head and shoulders top, but I am wondering about this wedge pattern that we seem to be forming at the moment. This, well, we've seen the breakdown through the neckline of the head and shoulders top, so that would indicate that the bias is bearish on dollar index and we can expect lower prices. But the way that price is kind of coiling within this potential wedge formation makes me believe that maybe if we do get a break to the upside, then we could see a fairly substantial correction in the value of the dollar index. But at the moment, while it's remaining within the wedge pattern, I am expecting prices maybe to continue moving lower towards the 50% Fibonacci retracement at 102.15. But I am on edge about this because if it does break up to the upside, then I think we could see a decent move higher. So the bias overall remains bearish, but there could be some sinister patterns brewing here that could lead to a sharp reversal in direction. So do keep that in mind. In terms of what's going on with Euro US dollar, we can have a look now. That is still holding up pretty well. We found some support around 105.95, so the pullbacks have been limited to that region and it still looks pretty bullish. Yesterday we posted a bit of red on the chart, a few losses, but we are pushing back higher today up by 0.33% as things stand. So while that remains the case and while support continues to hold at that level, I think we can expect maybe a grind higher to the upside, at least to test the previous highs that we posted on the 15th of December at 107.36. Let's take a look at cable before we can dive into some of the requests. There is actually a request on cable, I believe. Love Skins looking at that as to whether or not we'll get a retracement. So this is the daily chart. We can see that there's resistance here in blue at 124.30 from a previous low that was back in June. We rallied into that level and posted some rejections. We posted this big bearish engulfing candle on the 15th of December, and prices have pushed lower. We've got some support, or I've got some support at 120.29. So expecting that to provide some support. If you sort of squint, you can maybe see some sort of short-term head and shoulders here on cable. If we take a look at the intraday charts, and we can see it a little clearer. Something along the lines of this potentially. Have a left shoulder over here, then we have the head, and then maybe some sort of right shoulder here. It's not great, but potentially it is a right shoulder. You can see we kind of rounded off a little bit there to complete that. We did get through the neckline of it, but then bounced pretty sharply to the upside. So a bit unsure about this one, to be honest, at the minute. I think pullbacks maybe towards these lows that we posted on the I'll just go back to the daily chart. So back down to this kind of level here, 120.29 may provide some support, and that may be an opportunity to buy. As we can see, the trend is higher. We do have a trend here of higher highs and higher lows. So while that continues to be the case, I think we need to trade with the bullish bias in mind. Let's take a look at some of the yen currencies quickly, just because obviously they had such a dramatic move yesterday. This is dollar yen, still trading in this bearish channel. Support came in at these levels here that we mentioned, 131.25 to 131.50. Prices held above that quite nicely. So any speculative buying into that region there would have paid off quite nicely if you had a very short-term time frame. Overall, still looks pretty bearish and still looking for opportunities to sell into strength. The next kind of levels to look for, this key low from the 2nd of December, which comes in around 133.52, and then maybe this key low here from the 14th of December, which comes in at 134.55, and would pretty much marry up with the upper boundary of that downtrend channel. So still looking for lower prices here into this kind of region, which may continue to do a job, but obviously if that starts to break down, then we have a much larger top pattern in place. Let's take a look at euro yen. This was my gun to the head trade yesterday. We've got a head and shoulders, an upward sloping one. We saw the breakdown below the neckline at 140.71. We saw a retest of that level, and then prices were rejected at the first attempt at trying to overcome that. Let's see what can happen with that today, but the expectations are still for lower prices here. Let's take a look at Aussie yen. That was quite interesting. Again, another head and shoulders top pattern. Really aggressive move lower, found support this previous swing low from the 12th of May before bouncing quite sharply. So now looking for a retest of the neckline of this head and shoulders to potentially initiate fresh short positions. So all correcting pretty aggressively today, these yen pairs, following the big move lower, or the yen strength that we saw yesterday and the day before. Let's take a look next at Aussie Swiss. I know, Moch, you suggesting that this has bounced already. Let's just look at the daily chart first of all. So this is trading in a downtrend. Quite clearly, we can see there. Prices were then trading within a range for a period of time in between this phase here, between 0.6288 to 64.47. We saw a breakdown through that level and then found some minor support temporarily at the lows from the October 13th level. And then prices had a little bit of a look below that yesterday, potentially completing an even bigger range here. So we've got the lows here to the highs here, and we can actually project that lower to give us a measured move target much lower down on this one. So still looking for lower prices, I think, on this one. A couple of downside targets. The first one being 61.27, then another at 59.74. So what do we do in the short term with this? Yes, we can see that it's maybe a bit of a swing failure in here. Yes, it's correcting higher, but we are approaching some fairly significant resistance levels above. So let's take a look at the intraday chart. I've got a band of resistance here from a swing low back in December to these highs that we posted here. So in this kind of range here, I'm expecting probably sellers to step back in, to be totally honest, and send this lower. We might get a bit of an overshoot, but ultimately I'm looking for any rallies to be sold into. So in terms of the short-term bottom that you may have noticed here, there was a little bit of bottoming action on the hourly chart. We saw a nice break above that, a pullback to find support at that 62.06 level. So really, if you were going to go long on a speculative basis, you needed to be buying into this pullback here, targeting a move up to these resistance levels here at 62.65. What was the other markets? That's Sterling Oz. Let's take a look at that. Go back to the daily first of all. And it looks as though there were some sort of topping price action going on here. So we've seen prices rally, as we know, but it's really stalled into this region here around 182.45 and failed to get above that. We've got some major levels from back here on the left-hand side. We did trade above that, but not really making any ground. Yesterday, or today, in fact, we've broken down through support at 179.90. So that may indicate some short-term top formation here on the daily chart. If we take a look at it on an intraday basis, we can see a bit clearer. We've got this nice range set up here. So prices have rejected around here, as we know, seen a couple of failures at trying to break above it and then closing back below that resistance level. And then we saw a big aggressive move to the downside, which eventually broke down through that support level as well. So now that previous support should act as resistance if we're going to trade nicely on a technical basis, and that's at 179.88. So potentially looking to sell into a retest of this level, and then we have a measured move By measuring the value of the range and projecting that lower, that comes in at 177.20-ish. So if you're looking to sell into a retest today with a stop somewhere around here at 180.61, then you get a pretty nice risk reward ratio on that. For looking for lower prices on sterling Oz. I think the other one was Euro Sterling. So let's take a look at that. So going back first of all to the daily chart just to get some bias. So this was trading in a bit what looks to be a wedge or a triangle pattern. Obviously we got this big spike higher which was created on the I believe on the budget that the UK came up with, which is obviously a disaster. So we saw a big move to the upside, following by a big move down. Then prices found major support around this region here at 85.73. So on the 15th of December, we saw a breakout of that, and prices then pulled back to retest that before moving higher. So looking pretty bullish here on Euro Sterling for the time being. Next level of resistance is at 88.28. Let's take a look at the intraday, see if there's anything looking interesting here. I think Lavskins was talking about a inverse head and shoulders setup. I'm not sure I can quite see that. I guess maybe what you're thinking is this being the left shoulder, this being the head, and then maybe this being a right shoulder down here, which I can certainly get on board with. Really nice break to the upside there, and prices have continued to move higher since. So we are probably, from a risk reward perspective, getting close to these resistance levels up here. So I'm not sure how much value there is. It's kind of mid-range at the minute. I think I'd maybe on a speculative basis be looking to sell into that region there, and potentially looking to buy a bit lower to improve my risk reward ratio to head towards that target. If I was buying dips, where would I be looking to do that? Probably somewhere around here. And then we can draw a short-term trend, something along the lines of that. So a pullback into that region there, which is at 87.36, targeting a move up to those highs, and then maybe we can put a stop below these bits and pieces here, about 30 ticks. So decent little setup there, potentially for an intraday trade on Euro Sterling if you are looking bullish overall. Just looking on the 4-hour chart, so yeah, we can see it a bit clearer there as well.
Sterling yen, did you cover that, Joe?
Sterling yen, no, it's all going on today. Right, let's look at sterling yen. So go back to the daily chart first of all. As we can see here, prices were trading in a range for a period of time. Upside was capped at 169.09. We failed to get above that. Then we saw this big intervention by the Bank of Japan, and we saw this big red impulsive candle taking prices much lower, clearing out this support at 163.06. So that was pretty aggressive. So now what would I be looking for? Well, we've got a range here, so we can project that prices may potentially move lower by the distance of this range, and that comes in at around 157.00. So I potentially would be looking for a retest now of the underside of this range at 163.07, and then looking to target a move lower towards that measured move target on the downside. So that's it from a daily perspective. Probably go with a stop above the high of that impulsive candle, looking for a move down to that level. Risk reward isn't great on that basis, looking at about 1.5 as a risk reward ratio there. Let's take a look at the intraday. We can see here that range a bit clearer, and just get rid of these drawings here. So we've broken down through these big support levels here. These may now act as resistance on the reverse side. It looks like prices are trying to consolidate or stabilize following the big move lower. So I don't think we can rule out any kind of retest of these levels at some point. And there is where I'd be looking to potentially get shorts. We can see there is some support here as well from these lows that we posted in October. So a little bit of a look below that, but ultimately prices are stabilizing around here. So if you're brave and want to trade it in a counter trend direction, then maybe you could be looking to buy here with a stop below yesterday's low and target a move into those resistance levels. Again, the risk reward isn't particularly favorable. Typically, Steve and I like to see 2-to-1 risk reward ratios on any trade that we take. But potentially there is a setup there. But you are trading against the dominant trend. Looks like we are forming some sort of topping formation here on the intraday charts. Well, that's a bit of a marathon. Hopefully that helped.
Was. Yeah, sure it did, Joe.
Yeah.
Let's take a look at indices, and we'll start with Dow, obviously, because did okay in the gun to head yesterday, and I want to talk about it, obviously. But the main thing I was looking at yesterday was this golden cross in the Dow. Very, very positive formation. We also got the bullish hammer reacting off the reverse trend line and the 200-day moving average. So really, for me, seemed like a good risk reward trade idea, and it played out really nicely. We'll talk about it a little bit in the gun to head Joe will show you. From a sort of like today perspective, it's not as clear. We've had a good reaction higher, and now we're sort of like banging on the door of resistance, which is formed by these lows, which acted really nicely. Now we could be just retesting this area of previous support, and we could give up all these gains very quickly. But overall, the medium longer term potential is pretty decent. But again, we can still have a decent pullback to like 30,000, and this could be forming a huge inverse head and shoulders formation. We don't know. So from a day perspective today, I'm a little bit nervous. I was long of this yesterday myself, which I spoke about on the show yesterday. I'm still sitting there long of it. I put a big target all the way up here, but today I have pulled my stop in close to the low of the day. What's it, 33,360? I've got my stop just below there today, so potentially could get stopped out of that because that's not giving it much room. The Nasdaq also formed a pretty nice reversal formation yesterday. A morning star formation looks pretty decent, so that's got potential for the upside. So we may get that follow through. On this chart, we've got resistance which will be coming in. Let me just change the color of that. Oh, it's color of that line. Resistance will be coming in at 11,438. Now that will be quite a tough one to crack. It was previous support again, forming the resistance, and also we've got the what moving average is that 55-day moving average coming in around there as well. So resistance ahead for the Nasdaq if we can get that sort of extra propulsion or whatever we need. Same on S&P. Morning star formation formed, broke above the 55-day moving average. The resistance coming in 3,905. So a real key day today. Really needs some sort of volatility to punch our way through there. Otherwise, looking at the volumes, especially on the short-term chart, the volumes seem to be dropping off as we sort of like are making these highs. So I'm not 100% convinced by the overall rally. Let's take a look. Don't really look at Aussie 200 much, but it's posted a nice reversal formation again for the 200-day moving average and the 55-day moving average. We've got the golden cross today, so maybe that's the one to go for today. Aussie 200, very significant turnaround there. Bullish hammer, bullish engulfing. What has today got in store for us? Inverse head and shoulders on the China 50. We know about this. China's opened up again. Have we just had a retest of that break of the nape of the neck between the head and the right shoulder, which I always looked as that confirming a break of the head and shoulders, inverse head and shoulders, or normal one. We've had a retest of that level and seem to have projected higher from there. So looking pretty decent there. Hang Seng also nice little turnaround formation, looking pretty good. Inverse head and shoulder, retested neckline, bang, on its way up above the 200-day moving average. So looking decent. Nikkei, what's going on? Have you forgot about what to do? Maybe it has. Maybe it's really looking for some direction. However, the FTSE is quite clear on what it's doing. It's really trying hard and desperately to get through this real solid band of resistance we've got. We've got this band here, we've got that band there, and it seems to be leading the way at the moment. A great day yesterday, really sort of extended higher, probably the best day we've seen since 4th of November. You can see the size of that candle and the size of that one, so really led the way yesterday. DAX had the turnaround the day before. The bullish hammer, similar to the US indices. We've got the golden cross here. Everything's looking really positive on DAX as well. This Christmas Santa rally, I like it at the moment, but just need that extra bit of confirmation from over the next couple of days, really into that weekend. Then we've got like all the bank holidays next week. So as you say, maybe what it is, people book squaring, closing off their positions before we have this quite extended holiday. I think a lot of people won't be about next week. You know, we got the bank holidays Monday. Some countries have bank holidays Tuesday as well. It's very quiet in between. All the bosses go away. They take extended holiday, so everyone else sneaks off as well without telling the boss. So yeah, quite undecided about where that'll go today, but yeah, wouldn't be surprised to get the volatility in there.
Thank you, Steve. Okay, let's take a look at the gun to the head trades then. So this is where Steve and I pick trades live on the video. With if we had a gun to our head, what would we trade right now? Each of the ideas that we come up with have stops and targets. They're all placed at market, and we cut the trades out at 9 o'clock UK time, or when the stops or the targets are reached. So we do it on a basis of risking around 1%, well, actually 1% of capital per trade. That's how we would typically set up a trade. And we follow their progress throughout the trading day, which you can also do via our trading view profile at signal_center. We post these trades up every day. There is my trade yesterday. I was looking for continued yen strength in euro yen, so looking for lower prices here. We can see there was a big line of resistance that I was looking to hope that it would continue working as resistance and send prices lower. If we click the play button, we can see it didn't do an awful lot, but that level did act as resistance quite nicely and as expected. At the close, I was offside on this by 0.46 R. So not terrible, but Steve came through with the goods yesterday. Christmas came early here. Steve was looking at this inverse head and shoulders on the Dow, nailed that Santa rally pretty perfectly, and it went on to reach his target. So making a 3R return on that one yesterday. So well done to you, Steve. That is a cracking trade.
Didn't even realise, mate. Sorry.
Yeah, all right. Okay, so new trades today. What are we thinking, Steve?
We're thinking, as I say, I'm a little bit undecided by indices whether it'll have that powerful follow through or not. It could surprise me. I don't know what figures are out later, so we'll have a look at that in a minute. But the one that really I'm looking at is gold. Now, I've talked about this. We are in forming a bit of a major bottom, I think, at the moment. But there's still plenty of scope for maybe a bigger dip. As I said, I'd love the right shoulder to be somewhere down here. So there's still potential to get it. You know, this could be the neckline, right shoulder all the way down here. That's what I'd like to see, or even up here. I don't mind it here. But at the moment, we've got to sort of like, you know, I'll leave it here. So if it does play out, we can say we did look at that. But short term, we've stalled obviously only briefly at the same level as we did 13th of December. High was at 3 o'clock, between 3 and what's this, an hourly chart, 3 and 4 o'clock, was up here at 1824. We stalled again, but also, which is quite nice, this head and shoulders formation. Oh, I'll redraw that in a sec. Now, okay, I know what you're shouting at the screen. It's not a head and shoulders formation until it breaks the neckline. I know. I'm just sort of like potentially getting you ready for this. Now, for me, if we do sort of like take out this neckline here, and, you know, even if the indices have a little bit of reversal, because it feels like, you know, this is more of a dollar play rather than a gold play. So it's a bit more about risk on, risk off. So, yeah, this feels like we could sort of like see some action in this, but we need to break 1810. Now, 1810, you might say, oh, well, why is that significant? Well, it was significant at the start of the month. And if we look back historically, I'm sure I'm going to find loads of points in time. Ooh, August, around 1807. And all the way 1810 was, like, for me, has always been a bit of a key level. It's above the 1800 level. Even if we go all the way back here, we can see there's lots of price action that's taken place, and it's been quite an informative little area. So let's get actually, where's the volume count? Can it show me where we are here? So it's part of, yeah, I mean, if you look at the distribution of the volume over time, we are sort of like back in the meaty part of where the volume is taking place. So yeah, quite key levels around here. The big inverse head and shoulders, obviously on the daily chart that I've just shown you. So, but for me today, I'm going to fade this rally that we've had. If you look at the volume's dropping off a little bit. Maybe that's an indication that we're losing a bit of interest, a bit of bearish divergence between volume and price, maybe. So I'm going to look to sell into this strength. And the beauty of
To your
it.
head, Steve.
Huh?
You know you got a gun to your head.
Oh, sorry, I'm taking too long. Well, you get asked a load of questions by people, so you know, I'm trying to sort of make back my time. So let me just get the measured move target on this potential formation. Remember, 1801. So down to there. Oh, it's not good enough. I've got to bring the stop in to get it nice. Let's go for 2.5 to 1 risk reward. There we go. Getting short at 18.19. Don't mind giving away a little bit there. The stop is at 7.50. So $7.50 stop. And I'm going to look to take $20. That's maybe too much. Let me go for that. I'm gonna leave it like that. There's my hang on, we just moved. Yeah, selling at this level. Stop at 1826.75 and targeting a move to 1800, just around $1,800, just short of there, just below there. 2.67 to 1.
That'll do.
All
right,
right.
I'm going to take a look. Oh, you killed me here, Steve.
Oh, I see.
Lovely. All right, I'm looking at New Zealand dollar, US dollar. So this is the weekly chart. Really interesting candle here. We can see that this move lower in New Zealand dollar versus the US dollar has retraced pretty aggressively over the past 3 weeks, but then rallied into this 50% fib level before posting this reversal candle on the weekly chart. And as we can see, volumes have increased as well, but have subsided as a result of this candle here. So it looks quite interesting on the weekly. If we take a look at the daily, it is trading in a bullish channel, but we can see when prices tried to get above this swing high from August, we failed to do so, and that was on the 13th of December, meaning that maybe we are in the process of some sort of correction. And now, as a minimum, when looking for corrections, I'd be looking for a move down to the 38.2% fib level. So I'm kind of got that in mind, but obviously I'm aware that this channel is still active, and while it's still in place, there is potential for higher prices. But what I'm also seeing, and if you can see it just faintly here, is that there is potentially a head and shoulders top forming on the 4-hour chart. Looks really actually quite neat. So we've seen a upward sloping neckline. We can see that prices broke down through this level towards lows yesterday at 62.76. We've then seen a rally into the neckline of this head and shoulders top before forming what looks to be another bearish looking candle on the 4-hour chart. So I'm going to sell at the current levels of 63.10. The measured move of the head and shoulders top is at 61.25, which is where I'm going to target. Probably quite ambitious for a day trade. And I'm going to have a stop loss at 63.63, which is just above a few of these bigger candles here that have been formed between sort of 19th to the 20th of December. So looking for a 3.53 risk reward ratio on that today. We will get these ideas posted up to our TradingView profile very soon.
Nice one.
Okay, let's take a look at the data that's due out today. Not an awful lot for us to consider, but we do have US jobless claims, which is obviously a weekly statistic that's coming out at 1:30. And then tomorrow we've got US PCE prices index, so that'll give us another read on the inflation situation in the US. So that is pretty much that for today, Steve. Bit of a bumper session, but
yeah,
we enjoy everybody getting involved. So thanks for doing that, and hopefully the content that Steve and I provided today is useful and will help set you up for the days ahead. So it'll be the last video for Steve and I for the year tomorrow. So please tune in and get your requests in, and we'll do our best to cover as many markets as we can. But until then, everybody, have a great day and trade safe.
cheers.
Bye-bye.